Buy the dip or sell the rip. It's the equity edition of Sunday Night Charts here on Super Bowl Sunday in the morning. Let's head right into the S&P 500. We'll start out with the breadth indicators, looking at the percentage of S&P 500 stocks above their 50-day moving average, just sitting at 40%. Now, I want you to see that breadth is weakening here, and you can see it on the 50-day. And notice we'll go back to late January, December, September, October, and what do you see? You see nice bottoms start to form as breadth gets down to this -2 standard deviation. But what happened is people came in, bought this dip that would be expected. They should, because it tells you based on the breadth, you should be buying this dip. And what happens? Prices rally, but notice the breadth runs into its -1 standard deviation here and doesn't move. In fact, the last time we saw that here was in September. And what happened? Price went actually lower. So based on the percentage of S&P 500 stocks above their 50-day moving average, well, look for price to head lower. Let's zoom out now to the 200-day moving average. We see about 50% of the S&P 500 is sitting above its 200-day moving average. And notice that we've not seen a -3 standard deviation before until late January, which again, what would it tell you to do? We'll say this is a buying the dip opportunity. And sure enough, people did. Price went up, but notice it ran into resistance at its -2 standard deviation level and is now headed lower. If there's hope for the S&P 500, what you'll see is something that happened back in December into January, where price had not quite a double bottom, but notice how breadth caught itself before it unwound. Well, maybe this time will be different, but at the moment, it suggests that price is headed lower and looking for a potential an opportunity to buy that dip. Now, from a bigger perspective, let's look at the historical. And you can see if the S&P 500 doesn't hold up here, if it breaks that support on the 1-year chart at that -3 standard deviation, now we zoom out, we're at just above a -1 standard deviation on breadth, looking at the percentage of S&P 500 stocks above their 200-day moving average. What happens if this breaks down? Well, you get either a massive dip buying opportunity, potentially going back to 2016, a double dip opportunity. You see correction here, late 2011. You see a bear market, great financial crisis. So there's a lot more that could potentially unwind here, suggesting that perhaps buying the dip may not be the answer yet. Let's look at the relative strength indicator, or RSI, and we can see it had an oversold situation here in late January. Again, confirming when you look at the breadth of RSI, it's saying, hey, you should be buying this dip. But notice now that RSI didn't get over 50. It needs to kind of break through and get through 50. And you look back here in September, and it didn't quite get to oversold conditions, but it didn't actually break through 50. And what happened? Price continued down, suggesting that there is perhaps more weakness for the S&P 500. Let's look at the MACD. You'll notice for those who buy these moving average crossovers, it crossed over here, and now they're in a lost position, perhaps getting stopped out, maybe what we saw on Friday with price reversal. But notice how the shorter term moving average in black is rolling over and potentially either looking to confirm against the longer term moving average or break through it to the downside. So again, suggesting potential risk across the board from a breadth position, from RSI, from MACD. How about Momentum Time Pro? As of Friday, it's got 3 buy conditions. Of course, you'll have to sign up. It's still free, and when it eventually does go paid, those who are on the list now will get a heck of a discount, permanent discount. There'll be a link in the description below and up in the corner for you. But it's not even completely buying in on this deal either. So if you look at the big picture there, all those indicators are telling you that if you're in this, be very cautious. Now let's look at some of the broader term indicators. We've got the moving averages. Now we can see price is bearish on the 21 and 50-day moving averages. Momentum is bearish, indicating price is indeed heading lower. It's below all the key moving averages. It hasn't broken down a 6-month momentum, and that is a big signal where you see a lot of momentum algorithms at. But let's take a look at the charts and see if perhaps there's just something in the volume that'll tell us otherwise. And the answer is no. Here we are on SPY. Notice the 6-month volume profile now. Price got hammered into that and rejected on Friday, and price came down Up here, remember, this is a sell zone. This is a buy zone, and now gives investors a second chance to come in and buy these levels, potentially sending it back down to where it was at late January. Price down where it was late January was a huge amount of dip buying. You can almost suggest that there were people sitting on stop losses right in here. They got stopped out. There's a lot of people that bought in here, billions of dollars. Could see some selling there. Let's zoom in a little bit to the 10-day, and sure enough, you see on the 10-day prices get rejected as people are unloading their positions there, even on the 30-day. So risk to the downside on the S&P 500. Let's move on to tech stocks that perhaps we have a little bit better picture on of the bottom, and let's take a look at the percentage of NASDAQ stocks above their 50-day moving average. It's down to 22. Now this should be a buying opportunity. When you see 22% minus 2 standard deviation, go back and look, in the last year, you see at the early part of March, then buying opportunity. How about October, buying opportunity? How about into January? Well, potential buying opportunity down here, but price is almost back where it was. And you notice breadth, there wasn't a lot of strength in this move, and it's actually rolling over and heading down compared to the other times. Notice how breadth went up. More stocks were advancing against their 50-day moving average, and so this is showing some weakness, quite a bit of weakness, suggesting NASDAQ 100 could head lower. Let's look at the percentage of NASDAQ stocks above their 200-day average, sitting at a very low 33%. Again, what should be telling you, buy the dip, buy the dip. That's what this is telling you, because the last time it got down here, well, that was an opportunity, but now price is back pretty much where it was before. We're very close to it, and breadth is weak. So let's zoom out to the historical of the NASDAQ 100 stocks above their 200-day moving average, and we see a lot of weakness here. That if this doesn't hold up and it continues lower, there could be a much deeper sell-off. Then that would be the dip you're looking for. You see that happen in 2019, 2015, 2016. And looking at the great financial crisis, it got a little bit bounce, and we see a little bit one here. And then after that, it continued lower, going back to, of course, the days of the dot-com bubble. It came down and bounced and finally got a surge up here, but actually created a number of dip buying opportunities before it ultimately kept crashing lower. So risk, at least according to breadth, lower on the tech stocks. Let's take a look at RSI. We went oversold condition. Again, along with breadth, validating, hey, if you're a trader, you ought to buy this dip. But notice the RSI did not get over 50. It ran out of steam. In past, when it got down to these levels, it went higher. And you'll notice it went higher. And what is it telling you now? That, hey, it didn't break 50. Price probably headed lower. How about the MACD? If you got the crossover and you bought that, what happened? Now you're in an upside down position, and you see the short-term moving average, just like the S&P, rolling over. Either, hopefully, if you're bullish on this, it's going to confirm. And otherwise, if it breaks through, well, there's more downside to the NASDAQ according to the MACD. How about Momentum Timer Pro series on the last 10 days of sell signals, but one buy? And if you're starting to figure out how this works, is you want to look at the signals with Momentum Timer Pro, MACD, RSI, and have them all three confirming, and that's your signal. You use one, you might not be in the right position. You use two, how about three, and you've got the whole point of MTP, a great momentum tool, still free. All right, let's take a look at the longer term moving averages. Price heading lower on the 2150 and 100. Momentum is bearish on them, below all the key moving averages, down below where it was all the way through the last 6 months. That's not a good look for the NASDAQ. Let's head over to the QQQ. What do we see? 6-month volume profile, way above current price. But notice we have this buy zone, or the sell zone up here, and below we had a buy zone. So what happens is when prices move through a zone, the zone tends to switch. So what happened here is this, what was formerly a buy zone here became a sell zone, and it moved down to the next zone. And I'll move out to the 1 year just so you can get a picture of it. Here, down here is a buy zone, and buyers came in, and it looked like they were going to break through this what could have been a very short-term sell zone. Sellers still were here and pushing price down. And you can look now, the volume profile of the last 1 year is right there. We see Friday, price smacked right into it, got rejected, telling us tech stocks likely headed lower to retest the recent lows set back here in January. So again, that is also a bearish picture from a volume perspective. Let's go on to the small caps. Because here's another situation. If you look at breadth, you got to be thinking like, man, how can this not be a great opportunity to buy? Because you look at the percentage of Russell 2000 stocks above their 50-day moving average and is sitting at just below 27%. And when it gets down to this -2 standard deviation, it tends to be a buy. Although lately it hasn't been. In the last year, nothing's been a buy for the Russell. But you'll notice it gets down here again. What happens? People come in, they see an inverted head and shoulders, left shoulder, head, right shoulder. Of course, they're buying it. And what's happening? Prices rolling over. Breadth is very weak here. Again, suggesting that perhaps this isn't a big opportunity. And notice back here in July, it got down to a -2 standard deviation, and breadth rose and price went up some, whereas now price is looking like it's rolling over. Let's zoom out to the percentage of Russell 2000 stocks above their 200-day moving average, sitting at just under 31%. A lot of weakness here, not confirming that rally at all in price, suggesting again price likely to roll over. What about we zoom out to the bigger picture of the historical on the Russell 2000? What do we see? Just the percentage of stocks here, just weaker. And where is a big buying opportunity? Well, it's been just below these current levels at a -2 standard deviation on the historical. And that would put you around 20% of the Russell 2000 stocks above their 200-day moving average. So there is a potential. There could be a massive unwinding here coming, suggesting a huge opportunity for those who are waiting. How about we look at the relative strength indicator? We have an oversold condition right at the end of December. We have another one here toward the end of January. And what happened? Well, the one in December didn't really get above at 50. And you'll notice price kind of meandered and headed lower. And now look, it's not able to get over 50. What does that tell you? The direction for prices? Probably lower. How about the MACD? Perhaps only hope for people chasing the moving average crossover strategy as their preferred method. Look, you see the shorter term moving average in black well above the longer term moving average here in red. That is usually a positive sign, but so far breadth looks weak, RSI looks weak, MACD, well, if you bought the crossover, well, it looks like you're possibly back upside down. How about Momentum Timer Pro? Well, we know it's been a mountain of sell signals and only one day of buy as on Friday. Not enough confirmation on the MACD, RSI, and Momentum Timer Pro to say to buy into this one. How about we look at the longer term picture? Moving average, 21-day, 50-day, 100-day, all bearish, heading lower. Momentum on them, bearish, heading lower, below all the key moving averages, below where it was, 1, 3, 6, 9, and 12 months ago. So a lot of momentum algorithms, if they haven't started selling, they are going to, when they hit their trigger point, they will sell there. There's no question about how those algorithms work. Is they look at the trend and they turn into sellers. And we know, of course, that volume profile has been in this upper range. You can look back here over the last 1 year. So it's been way up here, even at the 2-year mark. So there's really nothing in the longer term view to look. Let's zoom into the 90-day, and the volume profile lines come down a bit, but still there's that supply zone. I want to zoom out and just show you. So up here we had the sell zone. Down here we had the buy zone. So what happens is prices will break through that buy zone and it'll establish another one down here. And I didn't draw it in because there's just not a ton of volume here. And what will happen is price will come up and try to get back into that buy zone and see if there's still buyers there willing to take prices up. Now, if that gets rejected at this, well, all of a sudden what you have is a bull trap and prices come down lower. So notice how price is running into that supply zone, getting rejected. The only thing it is above its 21-day moving average here in red, but notice it crossed through its 50 in green, reconfirmed the bottom of its 50 here in green, and then the 50-day moving average is headed lower, suggesting that price indeed is headed down. Let's look at the 30-day. It's trying to hold and form a little bottom here of the 30-day. So there's some positive news, not a lot, and it's trying to hold its 10-day, suggesting that perhaps in the very short term you could see prices move up. But I'll tell you what, if it doesn't, prices don't get through this supply zone, look for the Russell 2000 to head quite a bit lower. Now, we haven't looked at high yield bonds in a bit, but it's very important because junk tends to lead the broad equity market, and I wanted to put them in this week. Let's take a look at the relative strength indicator. Massive oversold position, and price is just going. Now remember, you can be in an oversold or overbought condition longer than most people expect, and in the past that was a buying opportunity in late December. This time it looks like a selling opportunity. Look at the MACD, not even close to a crossover. It's not even looking like a bottom here, telling you that high yield bonds are headed much lower. And then let's look at the longer term picture. We'll skip Momentum Time Pro. If you want to see it, sign up. You'll get your next first issue on Monday morning. Here we have 21-day, 50-day, 100-day moving average, all bearish. No, it's very clear. Price is headed lower. Momentum's headed lower, below all the moving averages, below where it was 12 months ago. Otherwise, a dangerous situation as junk leads the broad equity market lower. And let's zoom out here into a 2-year chart. And what do we see? That it needs to find support here very quickly, because at 82.60, 6 or 62 is, right there, trying to hold support going back to September 2020. If it doesn't hold here, then the next level of buyers is at about 82, and at some point, well, the market loses complete confidence and all hell breaks loose as prices head lower. Look at the last 10 days. You can see price advances are getting rejected here. Prices headed lower. Let's look at the 30-day volume profile way above there. So junk telling you that what the weakness you see in S&P 500 and NASDAQ is real, and perhaps the small caps will get rejected. And with that, we'll see you on the next show. Thanks for watching. Bye now. The content of this video is provided as educational information only. It's not intended to provide investor or advice. You don't have to be construed as recognition or solicitation by a security transfer instrument or participate in a particular trading strategy. This video was prepared by Steven Van Metre. Personal capacity, opinions expressed in this video that do not affect the value of financial or Steven Van Metre Financial.